Hey everyone, and welcome back to your Money Your Way YouTube channel. Today, we're diving deep into one of the biggest names on the planet, Apple stock. We all know the iPhones, the Macs, the watches. But what about the stock? Is Apple still the golden investment it once was, or are storm clouds gathering over Cupertino? We've crunched the numbers, analyzed the latest news, from earnings beats to legal battles and those headline-grabbing tariffs, to give you the full picture. Should you bite into Apple stock right now? Let's find out. Please note that the content presented in this video is for informational purposes only and does not constitute investment advice. We strongly recommend that you seek proper guidance from a qualified financial advisor before making any investment decisions. First up, let's talk scale. Apple is a behemoth, a titan of tech with a market cap floating around a staggering $3.2 trillion. That's trillion with a T. For years, this stock has been a rocket ship, delivering incredible long-term returns. We're talking nearly 200% gains over the last 5 years. But, and it's a big but, 2025 hasn't been kind. The stock has actually dropped significantly year-to-date, lagging behind the broader market. Why the slowdown? Well, part of it might be valuation. Apple trades at a pretty high price-to-earnings ratio, around 33 to 34 times its trailing earnings. That means investors are still baking in a lot of future growth. Now, let's talk recent performance. Apple just dropped its Q2 2025 earnings, and honestly, they beat expectations. Revenue hit $95.4 billion, up 5% from last year, and earnings per share set a March quarter record at $1.65. The real star of the show? Services. Think App Store, iCloud, Apple Music. This segment hit an all-time revenue record of $26.6 billion, growing double digits. This is huge for Apple because services are incredibly profitable. iPhone sales were okay, up slightly, but Mac sales also saw a nice bump. But there's a shadow, China. Sales in Greater China dipped again, down about 2.3%. That's a key market, and continued weakness there is definitely a concern. To sweeten the pot for investors, Apple announced a $100 billion share buyback program and boosted its dividend. That's management signaling confidence, and it helps return cash directly to shareholders. Okay, let's shift gears to the elephant in the room, tariffs. The new US tariffs are hitting Apple hard. The company expects a $900 million hit to its costs just this quarter because of them. That directly squeezes profits. So, what's Apple doing? A massive supply chain shuffle. CEO Tim Cook revealed a major pivot. For the current quarter, the majority of iPhones sold in the US will actually be made in India. And most iPads, Macs, and watches for the US market? They're coming from Vietnam. China remains the hub for the rest of the world. But this is a huge strategic move to dodge those hefty China-specific tariffs. It's necessary, but shifting production like this is complex and expensive. Next up, the App Store showdown. Apple's long-running legal battle with Epic Games, the makers of Fortnite, just took a dramatic turn. A US judge found Apple in willful violation of a previous court order. Remember how Apple was told it had to let developers link out to other payment options? Well, Apple tried a workaround, charging a hefty 27% commission on those outside sales and making the links hard to use. The judge wasn't having it. The ruling is a bombshell. Apple is now banned from charging any commission on purchases made through these external links in the US. Developers get much more freedom on how they link out. This directly attacks the App Store's lucrative commission model, a core part of that high-growth services segment. And it gets worse for Apple. The judge called their actions anti-competitive, accused a top executive of lying under oath, and even referred the case for a potential criminal contempt investigation. This is a major blow, both financially and reputationally, and could encourage regulators elsewhere. Apple says they strongly disagree and will appeal. Amidst all this drama, Apple keeps innovating. We saw the iPhone 16e and new M4 powered Max launch recently. Looking ahead, the focus is increasingly on Apple Intelligence, their suite of AI features. Getting AI right is crucial to drive future iPhone upgrades and compete with rivals who might be moving faster in some areas, especially in markets like China. So, what does Wall Street think? Analysts are generally positive, rating the stock a moderate buy overall. The average 12-month price target sits around $235 to $238, suggesting some upside from current levels. Alright, let's boil it down. The pros and cons of investing in Apple right now. The ecosystem. It's incredibly powerful and sticky. Once you're in, you tend to stay. Services growth. That high-margin services engine keeps humming. Financial fortress. Apple makes tons of cash and has huge profits. Shareholder love. Massive buybacks and growing dividends return cash to investors. Innovation. Proven track record, plus potential from AI and maybe future products. Cons. Regulatory nightmare. The Epic ruling is just one example. Global regulators are circling the App Store. This is a major risk. Tariff turmoil. The $900 million quarterly hit is real, and the supply chain shift is complex and risky. China challenge. Weakness in a massive market is a drag on growth. Pricey stock. That high valuation means Apple needs to execute perfectly. Fierce competition. Samsung, Google, Huawei, they aren't standing scent. So, what's the verdict? Apple is still an incredible company with immense strengths. That brand, that ecosystem, the services growth, it's all hugely impressive. But the risks are undeniable and growing. We're not just talking about competition anymore. The biggest threats right now are coming from regulators and governments, things like the Epic ruling and the tariff situation. These are complex, unpredictable forces that could significantly impact Apple's bottom line. Investing in Apple today means betting that its strengths can overcome these serious headwinds. It requires faith in Tim Cook and his team to navigate a minefield of legal and geopolitical challenges while still delivering the growth that high valuation demands. It's definitely not a clear-cut decision. What do you think? Is Apple good to buy now? Let me know your thoughts in the comments below. If you found this breakdown helpful, give this video a thumbs up, subscribe for more deep dives, and hit that notification bell so you don't miss the next one. Thanks for watching.